that you buckle up and get ready. Stand by. Hello? Yeah. He's on now? Okay, hold on. We've got a special guest. Hold on one second. I'm going to bring him on the platform. Ladies and gentlemen, let's see if you know who this guy is.
Hello, everybody. This is Harold Seitz, CEO and founder of Carabas International. On 9th of April, we have our great convention in Los Angeles. At the moment, we prepare everything of this. I have to announce a lot of news. At the beginning, in this year, we have 40 new products presented. Now we will introduce more new products. For example, Carrot Vital, Live Healthier with Gold, or Press Reset. Change your hip gold to real gold. And this is very excited, the world of charity, our project that will change the world. And last but not least, we present our new K Exchange Center page in Los Angeles. You get the information on 9th of April directly from myself. Come to Los Angeles. It will be exciting. Until then, I wish you good luck and see you in LA. Your Harold Seitz.
Wow, 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 Mr. Seitz, I appreciate you being with us, and we're going to be with you in Los Angeles. I'm just speechless. Dr. Chyna Bethley, you're going to have to take this because that was epic. Thank you so much for allowing Harold to join us. Thank you so much.
Wow, wow, wow. Thank you so much, Mr. Harold Seitz. We're so looking forward to seeing you on the 9th of April. And of course, we're going to be there on the 8th as well for a full day of training. So guys, if you have not made a decision to be with us on the 8th and 9th of April in Los Angeles, California, you saw it for yourself and heard it from the visionary of this company. Did he just say, Carabas Vital, where you are getting healthier with gold? I'm so looking forward to the K Exchange Centers and so much. But guys, tonight we have a real special treat for you guys. We have an encore presentational, incredible lineup that's just going to knock your socks off. You still have time to get people on with us, so definitely forward it out. But I'm going to move out of the way and bring to the platform none other than Mr. Wake Up and Smell the Coffee himself. And you guys know who I'm talking about. That is Mr. Dave Struckman. Dave, go ahead and take it away.
Yeah, I just want to put a exclamation mark on what our CEO and founder just shared. CarrotBarsEvent.com. If you're not signed up, get signed up. There's a lot of great prices. I've sent people over to Priceline.com where they're getting a hotel right next door to the JW Marriott. Airfare to and from the East Coast for like $700. So you can get some great prices at Priceline.com. And I'm not trying to plug them. It's just the cheapest place to go. So I wanted to put that out there, and it's the best hotel at the best price too. So they got packages together. No excuse for not being there. So Dr. Chyna, I just want to say it's awesome to hear you and see you on the call tonight. I'm going to go ahead and get started. And first off, last Saturday night, we did an interview with Kenneth Schortgen, and he is known as the Daily Economist. He's a global economist, and he's a historian in his primary field, an investor in the real world. And Kenneth has a very keen eye perspective from the insider point of view on all facets of the financial world. He's owned businesses, corporations. He's been an investor in many different markets, such as securities, real estate, currency trading, and international trusts. His desire is to help you make your own decisions in these troubling and actually sometimes turbulent times regarding your economic decisions. Now, Kenneth is not a certified financial advisor. His only goal is to give you the true, and this is with no filters, information by which you can see things not only as they happen, but in many cases before they happen. He's got an online newspaper. It's called The Daily Economist. He writes an article for that. If you go to thedailyeconomist.com, he's also a writer for Examiner.com, which is online, and he's been on many radio shows with millions of listeners. So with all respect, we're excited to hear from Ken. And Ken Schortgen, how are you this evening?
Good. Pleasure to be back on this Saturday night.
It's excellent to have you, and I'm just going to jump right into it. We're seeing a lot of things, and I'm just going to kind of go to the banks and what's going on, because it keeps on hitting the news, and a lot of people are not aware of what's kind of happening in other banks in other countries, and it's called negative interest rates. Can you tell us about that?
Yeah, negative interest rates. The primary interest rate, and I'll explain real quick on what that is, especially for people who have credit cards, student loans, mortgages, etc. The central bank sets a prime rate, and this is what is called the interbank lending rate. That's usually the 1%, 2%, 4%, whatever it is. This is the cost that banks use to lend money back and forth as they need it between each other. Then when they loan out to us, residential, commercial, credit cards, etc., the banks themselves will tack on the prime rate to the lending rate, and then that's what we have to pay for our mortgages, etc. Anyway, the negative interest rates means that they need people and banks to spend money because prices have fallen immensely. This is called deflation. So the banks have had to go out, and the central bank has had to go out and force banks to lend money so that they could keep the asset prices high, keep the asset prices going. A great example is the decline in oil prices over the last 18 months. And because oil prices have been so low, it's triggered a ton of margin calls and leverage, with over $1 trillion worth of loans between the banks and these fracking oil companies. And so in the end, what the banks desperately need to do is prop up the oil prices, prop up asset prices, get more people spending, get more people investing, so that they can keep this Ponzi scheme going. By negative interest rates, the key thing for us is that negative interest rates will cause those who have bank accounts, like savings accounts, checking accounts, CDs, even potentially brokerage accounts like your 401k mutual funds. If you keep it stored in their reserve accounts or the depository accounts, they will take money out. Instead of paying you interest like a normal bank account used to do, if it's negative interest rates, that means it costs them money to hold your money, and they're going to take a fee out, i.e. the percentage of negative interest rates. So the more you keep the money in the banks, and it's really not out of the realm right now because the United States has not gone negative interest rates. So far, we've had Japan, Sweden, and Switzerland. The ECB last Thursday, which is the European Central Bank, went to absolute zero. They were at 0.05. They went to absolute zero. Their next step is negative interest rates. Our central bank has already talked about negative interest rates. And if that happens, they're going to start taking your money out of your bank accounts just to keep the banks solvent and capitalized.
Are you saying I got to buy a toaster and take it to the bank to open up a savings account?
Yeah, you got to give them the toaster.
Yeah, I'm just kind of asking. I'm kind of being funny, but it's not that funny. I've got a client that's in Carrot Bars that had a large amount of money. I'm not going to give his name out, $200,000 from an Edward Jones investment account. And he tried to go down to the bank and collect the money. They wouldn't give it to him. They said, yeah, you can come back in a week, next Thursday, we can do $50,000. And I guess they're going to bring an armored truck in to do that, or they should have done it 2 days ago. So I'm going to ask you, what does this mean? I don't understand. If you got money in the bank, why can't you get it out? Because
your money is not in the bank. Your money has been leveraged out into loans. So the banks themselves only contain maybe 3 to 5% of the actual deposits that they claim on their balance sheet. That's why they can't really give out, it takes a week because they have to call the Federal Reserve. The Federal Reserve has to send the physical cash back to the bank, and then they can go ahead and give it to you. So, yeah, if there was ever a bank run or you want to get your money out, there's an old saying, it's not panicking if you're the first one out the door. It's panicking, though, if everybody tries to get out that small door.
I got you. So let's go from the banks. right over to the stock market, and I know you watch it every day. It's kind of going up and down. We get good news on oil, it goes up a little bit, then goes down. Can you kind of talk a little bit about what's going on? A lot of people have seen the movie The Big Short, and they're looking at 2016, and there's a lot of financial experts talking about the big bust that's coming this year. Can you talk about that?
Sure. The stock market hit its high in May of last year. Then we led to, for those who remember, the summer big 20% decline, and then leading up to December, they went ahead and recovered it partway. But as we started 2016, the first seven days and 17 of the first 19 trading days were all negative, and it went down really close to 20-25%. The key thing is that there's two types of trading. There's fundamental trading, and there's technical trading. Technical trading are those ones who looks at the charts every day and do the different indicators like the 50-day moving average, 200-day moving average, the trend line over 200 or 2 years or something. There's many different types of charts they can use. The point is that when you have 20% decline from an all-time high, that's what a bear market is, a 20% decline. When you have a 20% rise, that's considered a bull market. The bull market starts. Most of the analysts, whether you talk about JP Morgan, Goldman Sachs, et cetera, and especially all of the alternative media in the business world, they're telling you that this dead cat bounce that we've seen in late February and the first part of March is simply tied to the oil price, and it's tied to something else. The way they get the markets to move these days is they manipulate currencies. Isn't that fascinating how those things are intertwined? What the government and the central bank will do is they will mess around with the US dollar against the Japanese yen. And if you take a look at some charts for those who are technical chartists, you'll see as the yen goes up, the market goes up. As the yen goes down, the market goes down. Because once they start the dollar yen going, then the high frequency traders kick in and say, oh, there's movement, and they all start doing billions of trades a second. And the reason that's important is because of all trades since 2000, I would say 2011, 75 to 80% of all trades you see in the stock market are done by computers, not by individual investors, not by hedge funds, not by brokers. These things are just computers running around. So, the stock market, if you've got your 401k, if you've got your retirement in there, then you have to realize that there are no fundamentals holding this up, and the central bank pretty much can no longer keep the system going. They've put so much stimulus, they have bought so many assets, they've lowered interest rates down to zero, that for every $4 that the central bank prints, it only brings $1 in GDP. And that's why we're seeing going into recession and decline there. So,
is it going to get worse as this year goes on as far as the stock market, in your expert opinion?
As long as here's the thing, as long as we have deflation, the stock market will decline. If we hit that point where we start getting into high inflation and hyperinflation, interesting to note in history, when a currency event takes place, and that's really what I'm looking at. The stock market, I'm looking at the bond market mostly, but I'm also primarily looking at the currency. And for those of us in Carrot Bars, the currency is far more important than the stock and bond markets. If the hyperinflation starts to get in and prices start to really shoot up and rise, a lot of times you will see, whether it's in Zimbabwe, in Argentina, and these places that have hyperinflation or very high inflation, their stock markets are the biggest in the continent, the highest in the continent. It's because people have all of this money that you can't actually purchase assets, so they might as well just buy stocks. And so they throw it into the paper markets, and you'll see the stock markets at absolute highs, but they can't even afford to buy like a carton of eggs.
Amazing. ETFs. I read an article you put out recently, and it was about ETFs, which are exchange traded funds. And we're going to talk about gold, but before we do, what does exchange traded funds have to do with physical gold, and how does the stock market work to manipulate the price of gold?
Yeah, an exchange traded fund is primarily used where they can take a physical, tangible asset like gold, like silver, like corn, like whatever, and what they'll do is they'll monetize it in paper. So they'll tell you that if you invest in an ETF, an exchange traded fund, they'll tell you you're buying gold, you're buying silver, but really you're just buying paper, and they are coming at you with the promise that they have the gold and silver to back all those ETF shares in some vault somewhere. But of course, they've never been audited, so you can kind of figure that that's worth, the paper it's printed on. The key thing I think you were mentioning is the primary gold ETF, where people can buy paper shares and think that they own gold. GLD, which is run by JP Morgan, but there are several others. Now, there's one that's run by a company called BlackRock, and it's called iShares Gold Trust Fund. iShares or BlackRock came out and suddenly had to halt all new purchases and all new orders in their iShares ETF. The reason why is because the price was accelerating so fast, they couldn't get the gold to backstop new shares being submitted. And so that was a massive signal that there is an incredible shortage all across the industry of getting gold.
And Mr. Schortgen, you came out with an article, and I loved reading what you put out of your mind on owning gold, and it just blew me away. Owning gold is the best way to rebel against the corruption of Wall Street, banks, and governments. Can you talk about that, what that means?
Sure. There's one thing to remember in almost every investment. You have a counterparty, okay? When you buy a stock, your counterparty is that the stock may go down. You want the stock to go up, counterparty risk is that the stock could go down. If you own a bond, there's a chance that the bond yield could go down, especially if confidence in that. Same thing with buying a currency. Whenever you buy any single asset, there's a counterparty risk. Your currency, your dollar, the more the central bank prints it, the less purchasing power you have. So even your currency has a counterparty risk, but gold doesn't. Because if you own physical gold and you take it out of the system, who can take it? You have no counterparty risk. And gold stands on its own because gold is there to protect purchasing power. So they can't devalue gold. As a matter of fact, the more they devalue a currency, the higher the value of gold does in relation to that currency. And here's the thing. Since the beginning of the year, not just against the dollar, but gold is the best performing asset of everything. Throughout the entire world, every single major economy has seen the price of gold in their currency go up by more than 20%.
Amazing. So, and I'm going to just bring it out of you and get it out. And I know you're not a licensed financial advisor, and I'm going to put that disclaimer out there, but you are a global economist. You're an expert in your field. You see everything as far as not just the United States, but the global economy. And I'm going to ask you, why gold, why now, and why carrot bars?
Okay, I'll lay it out in the three ways that you presented it. First off, what we are in now has nothing to do with an economic recession. It has nothing to do with a stock market crash. This is at that point in time where the currency is at stake. We had China get invited in and brought into the IMF, which is the centralized alternate currency for everyone. They have what's called the special drawing rights, the SDR. It now has a basket of currencies, the yen, the dollar, the euro, the British pound, and just recently the Chinese yuan. So China is now moving in and is taking over more of the trade in their currency, and the dollar is declining in that. So the dollar as the sole reserve currency status is waning, and it's on the precipice, especially since it's been devalued so much. So you're seeing the rise in China. The second thing is that not only production-wise is China now the #1 global economy in the world, surpassing the United States. There was a Gallup poll about a month ago where they asked Americans who has the most powerful economy, and 81% of Americans said China does. That tells you right there that Americans are losing confidence in our economy, in our financial system, and when they start to lose that, they lose confidence in the dollar. Well, if you, the only thing backing the dollar, it's not gold, it's not resources, the oil backing of the petrodollar is going away. So it's confidence. Confidence that your government can backstop your currency and protect it, and your purchasing power. So as confidence wanes, that means that fewer and fewer people, they're going to want to keep in the dollar. They're going to move to something else. Well, right now, the whole global economy is devaluing the currency. Finland, just yesterday, Finland is looking to leave the euro. Britain is looking to leave the Eurozone and the euro. So the euro is losing confidence and is falling away. The Chinese yuan has massive debt, but it's not out there enough in the public for trade yet. So it's not quite something that everybody wants to move into. So if currencies are starting to lose, people are losing confidence in currencies, and they're starting to devalue and decline. And historically, a purely fiat currency only lasts about 30 years. We are in the 43rd, 44th year of the dollar. So it's beyond its point that it's, of confidence and use. So the dollar could go at any time. And if all your investments, your stocks, your bonds, your retirements, your mutual funds, IRAs, everything is denominated in dollars, and the dollar collapses, you lose. It doesn't matter what you move into in the paper assets. So there's one single thing that is neutral, stands in the center, the nexus, where all paper assets, all paper currencies are like spokes in a wheel. But the one thing that cannot be touched is gold. So if you're wondering what the world's going to transition into, then you want to be in gold, wait for the transition to happen, and then you can take that and turn it into any currency you want, and then start investing going forward with the new system. And the reason that Karatbars is so good is because it offers a number of different things like affordability, portability, fungibility, the ability to liquidate it if necessary, upgrade it to your Karatbars debit card, which can be spent in any currency. You don't have to change it to dollars and then change it to this and change it to that. It can be spent in any currency around the world. It's portable. You can take it with you. As a matter of fact, I always like to make the joke, how'd you like to have a business in your entire financial system running just on a smartphone and with debit card, and you can go anywhere in the world with that? And they won't stop you at any airport. They won't stop you at any custom spot. Plus the fact that you have the ability to keep it stored, your gold stored offshore in a vault. Now, one of the things about Karatbars that is vastly important is it is considered, it's not generic, but it's considered generic gold in the vernacular. A U.S. Gold Eagle, a Canadian Maple Leaf, a Australian Philharmonic, a Chinese Panda, those are considered sovereign gold minted by the sovereign countries. When in 1933, when FDR signed the executive order to confiscate gold, he couldn't touch the British sovereigns or the Krugerrands that people had in the country. He could only confiscate the sovereign gold that was U.S. minted. So by having Karatbars, which is considered generic, even though it's 0.999 currency grade gold, generic is a bad term, but that's the industry term. Because it's generic, no country in the world can lay claim onto it because they're protected by international corporate law. So it's great to have gold in something that can't be confiscated, can be stored offshore, can be liquidated and used in any currency in the world, and it's affordable.
I'm going to ask Mr. Schortgen, in your expert opinion, and I think I've asked you this before, and there's different financial advisors coming out there. They're talking gold could be as high as $3,000, $4,000 an ounce, some cases $20,000 an ounce in the next 18 months. In your expert opinion, what do you believe it's going to be?
Okay, I'm gonna set this with a caveat, and then I'm gonna put put my final thoughts on it at the end. Gold by the end of this year, some of us, especially Peter Schiff, Jim Willey, and a number of the alternatives, by the end of March, we should be seeing $1,400 gold. Okay. By the end of the year, we should be seeing around $3,000 gold. And then subsequently, 2017 is going to be much bigger. These can all change based on events. Right now, gold is an event-driven thing. First off, India. 2 years ago, India was the largest importer of gold. And their government, which was working in line with the U.S. government to try to save the dollar, they put massive import duties, taxes on it. As a matter of fact, there's a lot of big stories out there that the Indian people were smuggling in gold all over their body. We won't talk about where they were trying to smuggle it in, but needless to say, India has always had gold for thousands of years. It is part of their tradition, their heritage, their ceremonies. As a matter of fact, if you ever see pictures of Indian people, they always have chains on, and a lot of them have special designated links because they use gold as money. And if they ever needed to use the currency, they just pull off a link and they use that in their transactions. So gold has, India, once they remove the import duties, you are going to see demand in India skyrocket, which will automatically, because we talked about the shortage of gold, that's going to intrinsically raise the price in a very short amount of time. Then comes the big one, China. Now, China's got a threefold plan. The first plan, they've already come out, and there are strong rumors that are being leaked from the Shanghai Gold Exchange. April 19th is a red letter day. That's the day when China is going to start announcing a new gold price in the physical market in yuan. Now, for 115 years, the gold price has been determined by a bunch of bankers sitting in an office in London, the London Gold Fix. And a number of those banks have actually sold their commodity share in there, and China's gotten on board in the London Gold Fix. The other place is the U.S. Commodities Exchange, the COMEX. But the COMEX no longer delivers gold. As a matter of fact, as a futures market where people buy futures contracts, they're supposed to get delivery. That contract is to get delivery of gold on, say, the third week of the month. But COMEX has not delivered gold at all for over 2.5 years. They have no gold. That's the big secret and lie. The problem is there hasn't been an entity strong enough to challenge them to wrest their pricing of gold from them. The Shanghai Gold Exchange will, because it is the largest physical gold market in the world. And they're not going to deal with paper contracts or derivatives. They're going to be dealing with, you want to buy a contract for gold delivery? Here it is, and we're going to determine the price. And if you go over to China right now in the Shanghai Gold Exchange and you buy any large size of gold, they're taking that spot price that the COMEX in London determine. They're already jacking it up 30 to 60% higher, because that's the true value of gold now. It's been manipulated down here in the West primarily to save the dollar. This is why I'm saying this is all about the currency. Now, Shanghai Gold Exchange, April 19th, they're going to go ahead and determine the gold price. Then they're going to force the COMEX in London to arbitrage. But what I mean is arbitrage is, if China says that gold is the equivalent of $3,000 US, because they may just immediately set that as the price on the first day. If they say $3,000, well, the COMEX, of course, the spot price right now is about $1,255. If China was doing that, all the COMEX would have to do is they could sell their gold to China for $3,000 and then buy it back for $1,255 and collect the profit in the middle. That's the arbitrage. But China's not going to go active unless they know that the West has no gold to sell. And as we saw in Canada, if anybody's seen the stories, Canada just dumped all their remaining gold in like 2 weeks. So Canada has none. The U.S. has none. J.P. Morgan has proven they don't have any backing up the GLD. The BlackRock doesn't have any enough for their iShares. The West has no gold. So once China can validate the price and seize control of it, the COMEX disappears. China now determines the price. Then comes the next step. Next up is they're going to back all trade contracts in gold. So there's going to be a trade note. So if the U.S. if Walmart wants to import a bunch of doodads from China, they have to get a letter of credit and have the gold to back it up. Same thing with China. If China wants to buy some resources from Brazil, they've got to have gold backing up their letter of credit. So now we're going to have trade backed by gold. And once you have trade backed by gold and everybody starts getting into it, the next step comes in, currencies backed by gold. And here is where the gold price will get up to the Jim Sinclair $50,000 to $64,000 an ounce, because there is $272 trillion worth of debt out there, sovereign debt floating around. To backstop that in currencies, you have to have enough gold to handle $272 trillion, which means that the gold price, to be able to do that, unless you somehow wipe away all that debt with a great jubilee or great reset, to backstop your currency will have to be about $50,000 to $64,000 per ounce to backstop the debt that's all out there. So it's going to go in steps. It's going to go the bull market that we're in now, because we've gone up 20%, so we're in a bull market. So we're looking at, unless it gets manipulated, it should hit 1,400 by the end of the month. Then April, when Shanghai Gold Exchange, they can set the price as they see fit. I'm thinking they're going to be between $2,500 and $3,000. So there's a good chance we can have that in April. They're going to keep that unless some black swan event comes. That's my thing by the end of the year is $3,000, the equivalent. And then going forward, sky is the limit.
Amen. Go for the gold and dump paper. That's the bottom line. And again, I want to end this with the disclaimer. This is not financial advice. You're basically, from your expertise as a global economist, anyone wants to read any of your articles that you publish, thedailyeconomist.com, is that correct?
That is correct.
Okay. I want to thank you, Ken Shortgen, for your valuable time. And again, we've got a strong message here. We're looking at 5 weeks until April 19th, and all this is going to happen. Now is the time to buy gold. I'm going to turn it back to Dr. Chyna. Thank you, Kenneth.
Thank you.
Wow, wow, wow. Phenomenal information. Thank you so much, Kenneth, for that. I'm just sitting here taking a bunch of notes. I appreciate your perspective, your expertise, the timeline, guys. We have to be very, very aggressive. Just like, Dave just said, about 5 weeks away. Something is going to happen on the 19th. And so I want to encourage everybody to be really prepared, start aggressively getting gold right now. Want to move you guys into action. Sometimes you hear information and you're just like amazed at it, but this is time to really act, to get as much gold as you possibly can. Pull your family members in, pull your loved ones in, let them see the recording here so that they can understand what's going on, even if they don't understand it at a level, of really comprehending it, but just look around you guys. So much is happening. So thank you so much, Mr. Ken, for that. We appreciate that. Thank you so much, Dave. Once again, we're excited about this stuff. I'm ready to go and buy some more gold right now, guys. We need to be getting gold by the ounces, gold by the ton, as much gold as you possibly can. Caribars International has the most secure gold on the planet. I love how he said, listen, we are protected. No country could claim our gold. So even under these confiscation laws and things like that, they cannot touch our gold. So that was very powerful information. So guys, it's time to get as much as you can in your reserve. You need to be stocking up aggressively. You heard what he said about what's connected to paper. Whatever happens to the paper, if all of your retirements and your whatever you have to build your legacy, if it's connected to paper, whatever happens to that paper happens to all of your retirement and your legacy. So be wise, move out now. Use pure wisdom. We're not advising you on what to do specifically. I can just tell you right now, the only thing that I have in the bank is what I'm willing to lose. And so, that's up to you to take heed to that. But gold is where it is right now. It's the only asset that has been performing very well since we kicked off 2016. And it is time to be aggressive to protect your family, your finances, and your future. So thanks again. I'm excited. Powerful information. Thanks, Ken. Thanks, Dave. And thank you, Mr. Roger Williams. Guys, that is it. It is time for us to go and get some more gold tonight. Don't wait until tomorrow because the price can go up by the morning. So get some gold ASAP. Somebody's on here looking to upgrade their package. Please get with your senior sponsor so that they can help you to do that wise choice, and go to your back office and get that package upgraded. Thanks so much for being on with us tonight. Come on and close us out.
Oh, come on now. Come on.
Guys, remember to still vote for Mr. Harold Sykes. Vote, vote, vote. You know, that website link. If you guys have that link, put it up. Go vote, guys. I believe the last time we checked, we were number 9. We're pushing for the #1 spot because we have the #1 compensation plan in the world, because no one else pays out in gold. Make sure you go and vote for Mr. Harold Sykes to be the #1 compensation plan with Caraboys International in the world. God bless you guys.
Let's make some history tonight. The child inside is wild. Let's make this moment come to life. The time is on our side. Don't know what's up ahead, it's only high and low. Picture it in your head, nothing's impossible. We're gonna make it now, we're gonna leave our mark. Let's take a shot in the dark. Ready, set, go for gold. Chasing every heartbeat, we can feel it starting. Ready, set, go for gold. Chase it till we own it, living in the moment. Ready, set, go for gold tonight. Ready, set, go for gold tonight. Even if we fall and make mistakes, we live, we learn, we change. Gotta keep on going every day, and it will be worth the wait. Don't know what's up ahead, it's only high and low. Picture it in your head, nothing's impossible. We're gonna make it now, we're gonna leave our mark. Let's take a shot in the dark. Ready, set, go for gold. Chasing every heartbeat, we can feel it starting. Ready, set, go for gold. Chase it till we own it, living in the moment. Ready, set, go for gold tonight. Ready, set, go for gold tonight.